behind the scenes, it was a small group of people that were doing everything.
Welcome back to the GTM podcast. It's your host, Scott Barker.
I want to know how this insane growth actually happened.
What is going on, everyone? Hope you are having a good day, whether it's the morning, afternoon, you're at the gym, you're cooking dinner, maybe you got a little space between meetings. You are certainly in the right place. If you're in charge of growing or scaling tech companies in any sort of capacity, you do have the right podcast in your headphones right now. And today is a good day. Good day to be a day and a good day to be tuning into the pod. I am joined by the legendary Juan George. JG, how we doing, brother?
I'm feeling good, man. Fired up to be here and a pleasure to be part of the community, man. So thank you.
We're so lucky to have you as an LP in GTM fund and just a great supporter and a good friend. And I don't know when this is exactly going to come out, but you're coming off a big Knicks win right now. So you've got some good vibes going on.
I feel great. You know, like Knicks fans have been through pain for the last really 2 decades. And this feels like the first team I'm excited about since like 1999, if you could believe that. So, yeah. And we're up 3-1, baby.
3-1. Let's go. I'm Canadian, so I just, kind of get to float around and be like the ultimate bandwagon hopper. So, especially on the West Coast. Awesome. So I just want to quickly set the table for those listeners. So quick background. Juan George is currently the co-founder of 858 Partners, which is a boutique restaurant technology management and investment firm that he actually recently co-founded with his former CRO just in January. And really what 858 does is provide go-to-market expertise, capital, and connections to restaurant tech organizations, possessing the ingredients to achieve really extraordinary success, going for those big wins within the enterprise restaurant vertical. And prior to launching this, agency firm, JG was the former SVP of Enterprise Sales at Olo, which is a publicly traded company now. So congratulations. And that was the leading on-demand commerce platform for the multi-unit restaurant space. And we'll get into it, but you joined Olo as a seed stage startup. And over the course of a 15+ year run, helped them go public. This is kind of the tech dream, is starting from literally ground zero and, seeing it all the way through. And Olo signed 71% of the enterprise restaurant market. And I'll let that just sink in for a second, because that is crazy market penetration and dominance. We'll go into some of the other things that you were able to achieve, but hell of a story, man, hell of a run. What else should people know about you?
First, thanks for that background. And again, it's awesome to be able to now on the other side, talk about it a little bit more publicly, because, when we were doing it, we were heads down. So a little bit about Olo and kind of my chapter there, right? I joined Olo during the second semester of my senior year of college, right? This was back in March 2007. It was 3 months before the iPhone came out, and no idea what I was doing, but I was totally chasing the idea, and I believed in it that one day people were going to treat their phones like their remote controls, and then at mass order food, right, and pay for it in advance. So it's this 15.5-year story that I would break down into 3 chapters. The first chapter is finding product market fit, right? Everyone goes through that. This $0 to $1 million ARR chapter. For us, though, that was 7 years of trying to figure our stuff out. So we were this New York City-based startup. It was one of the earliest tech companies in New York City during that era. And over that 7-year period, we were predominantly this 12-person company of people, friends of mine in their 20s. Most of us, it was our first job out of college, and they say your 20s are for learning. That's exactly what we did. We failed over and over again. We probably should have closed up shop dozens of times, but we held on to this like don't stop believing journey mentality. And, ultimately we found like the fast moving water, which was this customer out of Texas that allowed us to turn, which was at that point in time, a B2C business into a B2B2C business. And then, everyone remembers this in the kind of the process, you get that first banner enterprise win, right? For us, that was a company called Five Guys Burgers and Fries. And that was the one moment that allowed us to find that kind of elusive product market fit. So I'd say for me personally, during that time, I did both customer success and sales. And I say that because every salesperson that came in the door during that first chapter got fired. And so I was just scared, frankly. I was like, I'm not doing that. I'm going to do customer success and sales because I can do more and hold on to kind of a bigger piece of the pie, right? So that first chapter was 7 years. It unlocked the second chapter, which I'd call like the rocket ship years, the 6-year period, which we went from 1 million to 45 million in ARR. And we were doubling the company every year, and it was a 6-year period where really Ola became the gold standard in like enterprise e-commerce ordering. And we introduced like new modules that were really groundbreaking for the industry around third-party delivery and allowed us to really get past our competition where they couldn't keep up. So we ran this top-down sales book. We carved out ICPs throughout the enterprise restaurant segment. I spent these 6 years basically on the road, thousands of airline miles, hundreds of restaurant brand HQs. And in that era, I went exclusively to sales, right? Because the confidence was there and I felt good. The customers were buying. And at the same time, I had this customer success background, which I could leverage like the product and how it worked and talk about that in kind of the real world setting. And that, chapter 2 unlocked the final chapter in the story, which I went from an IC to a leader and a private to a public company. So during the first 13 years of the company, I was an individual contributor. And I wouldn't have changed one thing about that. I read all the leadership books and I was always to step up, kind of ready to step up into the moment. But I got my jersey called as a leader in January of 2020. And at that point in time, Ola was already, the hottest tech, right? The must-have tech. And then 3 months later, you throw COVID on the scene and it was like throwing gasoline on a fire, right? So this became quickly mission critical tech. And listen, we didn't build our business because of COVID, but you're damn certain that we executed. And so that year, we took the company from 45 to 98 million in ARR, and that set the foundation for us to go public the following March of 21. And that set to the next chapter. So I operated in the role of a publicly traded company, SVP of Sales, for 18 months. We acquired 2 companies. I beefed up my team. I hired my successor and then handed her the keys in August of 22, where we exited the company at nearly 200 million in ARR. So, proud of the results, right? I think we created this special company. We did it the right way. And I think the stat I'm most proud about is we did this with a 99% customer retention rate. We did this by building a high trust company. And ultimately, it's the relationship capital that allowed us to do what we're doing today with 858.
There is so much in that story to admire and to dive into. I mean, one of the things that sticks out to me is, 13 years as an IC and the amount of learnings that you have being like boots on the ground. You're not managing people, you're managing directly with customers. You're seeing their problems across the entire funnel, even after in the post-sale with your CS role. And it sounds like you were doing a ton of prep for when you got called, but you weren't like rushing into it. And I feel like in this day and age, there's such a rush for folks wanting to get into leadership that feels like a badge of honor, that feels like progression. And sometimes we can skip steps that are extremely important for our knowledge that's going to make us be just a way better leader. And the other thing is, during those first 7 years, when you're doing this dance of product market fit, did you ever have thoughts or doubts of like, maybe I should jump ship, maybe I should go? You probably saw all these faster growing tech companies. Like, did you ever get that urge to maybe go somewhere else?
Yeah, for sure. The 7 years, right? Like, I was 21 when I joined, right? And so this was the first job out of college, but it's also kind of, we were naive in that like this was happening, I'm sure our CEO and our founder, they were under way more stress than we were, right? But they kept a good face. We had an incredible leader that kind of kept us motivated. We knew we had this trend, that was mobile, right? Like the iPhone came out, things were starting to happen, right? Like Uber came out, all these things started happening during that period of time. So it was just staying patient, right? And frankly, like in our 20s, like I wasn't like incredibly smart and gifted. I'd say I was a B- kid in school. So I just had fun with the crew I was with. We knew we enjoyed being with each other. We knew we were building something special. And so if we stuck with it, something would happen. And that bet turned out to work out. But there was plenty of times like I'd see friends, right, that were doing better than me, or you get like, what is that little thing you're doing over there? Like, is it taking off? Are you looking to do something else? And sure, I got tempted. I've been on job boards, but again, happy that I just stuck with it, right?
Yeah, there's something to be said about just patience and having that mentality of like, listen, I'm here to learn. I'm here to learn, and if I'm still learning, then I'm gonna keep it rocking. And there's a quote that I'll kind of bastardize, but it's basically, a lack of patience can end up changing an inevitable outcome, right? And had you left, had you chased a title, had you, gone for a quick win, you wouldn't have had this incredible learning, this incredible journey, and this incredible, arc. So that's a big one. All right, so more on Olo, and we're going to get into sort of this vertical SaaS playbook. I think vertical SaaS is having a moment right now. There's a few. I look at vertical SaaS having a moment, and then kind of the AI space, and all of that's gonna probably blend together pretty quick. But I think that'll be a fun one to wrestle with, and we're also going to get to a big win story at Olo, which will help us, highlight some of the things in the vertical SaaS playbook. But before we get there, I'm just super curious about 858. How's it been going? You and I, this is straight up live. I haven't had a chance to talk to you about it. You've been at it now for, roughly 4 months. How does it feel going from operator to VC? I might know a thing or two about that transition.
Yeah, no doubt, man. No, it's crazy, right? So for me, again, 15 and a half years working at Olo, with Olo, it was my identity, right? And so I had to work with this executive coach to figure out who I was outside of Olo. And, the opportunity came up to partner with my former CRO, who, in my opinion, is the second most important person in Olo's history. He's the guy that helped got our brand, our messaging, our buyer, our story right. And he's also a mentor to me in business and a personal friend that lives down in San Diego with me. So it was really irresistible to try to recreate some of that success with him this go around and have it be, our company versus working for someone else, right? And so this kind of agency mindset. But, it wasn't originally the plan, right? That we were going to do something together. He left in June of 22. I left 45 days after him, kind of independently. But we kept chatting over coffee in North County, San Diego, and sunset toasts at the Monarch in Del Mar, if anyone knows the spot. And I think we were flattered with the inbound opportunity that we were getting. And we were kind of trading notes on those opportunities. And I think we were both having the same reaction, right? Like there's a lot of like nice to have tech, not mission critical, that's meeting the moment. And at the same side, we were like talking to the operators and they were giving us their pains. Like, hey, here's what are the problems. Here's who's not kind of addressing them. Here's what, you could be looking at. So we felt like that spelled opportunity for us. And that's where 858 was born. And our objective is really to partner with restaurant tech companies, so kind of vertical SaaS, in two main arenas. So the first one is this advisory practice that we've created. So think about like a GTM practice, a brand practice, and it's where we act as an advisor to the company on a fee basis and help them with commercial and strategic matters. So we've got half a dozen of those things actively going right now, which is exciting to just talk to the next generation of companies that we feel are meeting the moment. And then in parallel, what we're excited about and where the long lens is in the investment practice. So think about that as 858 leading an investment and or helping with some M&A within that restaurant tech ecosystem. So we're currently in stage of leading a deal where we've got participation from industry insiders, And we expect to get involved with less versus more. So 1 to 3 deals per year that we feel like we can put our thumb on the scale and ultimately create a little bit of a holdco that way. I think the cheat code for us is kind of going back to the relationship capital that we built while at Olo, right? So these are people that we formed partnerships with, that trusted us, that we never screwed over, right? And so as we exited out of Olo, we assembled this 858 advisory board. This is a group of 23 operators. So think restaurant CEOs, CFOs, CIOs, chiefs of digital, folks like that represent roughly 30,000 physical locations. So these folks are power players in the industry, and they're telling us the problems they're having. They're telling us where they're going to spend money. They're telling us who is not addressing the challenges, and we're ultimately mapping that to the investment practice or the advisory practice. So we're 4 months in. Unlike the last go around, 7 years, we found product market fit already, and we're off to the races and in business.
I love it. It's very much in line with some of the broader trends we're seeing and we believe to be true in sort of the capital allocators part of the world, which is this idea of capital plus, and it feels like it's not enough anymore. Like founders don't just want a check anymore. And then maybe, you jumping on and saying a couple good one-liners at a board meeting, here and there. They want real support because it's out there. And I think we've cycled enough through kind of the SaaS cycle that there's a lot of people who have seen zero to IPO like yourself in a given category, or they have a specific function that they're great at. And, I feel like it's going to kind of break away into, there's going to be sort of these capital allocators who have a function expertise like GTM or maybe design or brand. And then there'll be these really deep category players like restaurant tech who have those connections, can help you get your first customers. And what's interesting, which I'm sure you're seeing too, is it helps every step of the way, from like deal flow to sourcing to due diligence, product development. You can check out roadmaps. We have scenarios where a founder will tell us, and we're evaluating deal, and they'll be like, oh, we think the channel's going to be a big strategy for us. And we'll just be like, well, who's your best channel partner? Oh, we think it's going to be Square. I'm like, well, we know some people at Square. Let's go to the top and say, hey, would you partner with these people? And they're like, oh, actually, this is on our product roadmap. We never would. Our partnerships team is probably just being nice to them. And then you get this insider information that almost feels unfair. But what we're looking for as investors is an unfair advantage. And if you can become your own unfair advantage, it's a pretty good way of tipping the scale.
Yeah, that's right. I mean, for us, like over that run we had at Olo, again, it was fascinating as we were coming out and talking to brands, and folks looked at the ecosystem of restaurant tech, and there's only 2 companies that have gone public over the last decade, right? That's Olo and Toast. And so we had the opportunity to lead GTM, right, at Olo, and by the way, do that from the enterprise perspective. So we had this reputation on our hand as the greatest enterprise success story of our generation. And so why not apply that and double down on the category that, we spent time in and built relationships in? So, we are hyper-focused on saying no more than saying yes, right? Like we want to work with people first and brands that we feel like we can influence the outcome of. And that is mapping to things that we're interested in. So for example, we don't want to work on like the marketing tech stack. We want to work on enterprise IT. We want to work with things that are not as much front of the house, but we want to work on more things that are back in the house. That's having a moment, right? So we're thinking about like this kind of who's the ideal customer profile for us, right? Like where can we have the biggest impact? Where can we share our learnings? And, that is creating kind of rigor in the process. And like the good thing is like the engagements that we're working on, we're at like a 10 for 10 NPS score, and that's what you want, right? People are happy because we're saving them from mistakes that we've made, by the way, right? Like, don't do that. Like, that's going to waste 2 years. Or in this account, you're chasing the wrong person, right? Like, don't go that way, go this way. And so we're not trying to be your outsourced sales team, right? But we are trying to coach you in the deals that we won, right? And we know the people in, and if some of those map to the moment, we can help broker some of those connections and some of those deals.
And you're proving your own model with you went from 7 years to find product market fit to 4 months. So you're proving you can shrink that first chapter, not only for the companies you work with, but yourself as well. I think that's a good segue into, this idea of enterprise sales efficiency and sort of this new vertical SaaS playbook. And would love for you to sort of walk us through how you're coaching some of these folks, and maybe that will bleed into this big win story that you had with Wingstop as well.
Yeah. So vertical SaaS, right? Like, that's my lived experience at Olo. And it's where I would call it this focused, number one, kind of lean, number two, an efficient enterprise SaaS sales machine that was developed. And so we kind of break that down, individually. Like, let's start with focus. So the focus was knowing your ICP, right? Like, kind of as basic as that. Our ideal customer in that point in time was the domestic enterprise group. That was the kind of focus, and that was our sweet spot. So we had to, in that process, say no, right? And we had to say no to a ton of different things that we just weren't good at. So for example, we had to say no to international, right? We actually were just mostly in the US. We couldn't even go to Canada because of things like currency and language, right? If you went to Montreal, you have to now convert everything to French, right? So like, we said no to that. We said no to pizza. So for example, that was like half and half toppings. They had native delivery fleets that our systems weren't operating well with. So we just said no to that segment of the market. Things like stadiums and malls, like, while it would be great to order a burger from my seat at MSG watching the Knicks, like, that was complex. And so we said no to that. And kind of, again, more and more and more of those, right? Like, until we got to the point where it was defined where we had 100 stores, like, that was our starting point of like the bottom. And then we went up to the top 15, which roughly had 2,500 stores. So that left us with 250 brands. That was the serviceable addressable market, the SAM, right? And on the bottom end, why we said 100, it's funny, like, for years we would say no to anything under 40. I don't know where that number came from. It just felt like the right thing. But the reason why is like, we would see the same amount of effort it took to do a 5-unit deal or a 40-unit deal or a 100-unit deal. It was the same resources on the sales side and the deployment and customer success side. So we just decided to go for more bang with our buck and start at 100, right? So that was the starting point for enterprise. And on the top end, kind of crazy, but we said no to the biggest of the big, right? And we didn't actively chase that. So think about the golden arches at McDonald's or Taco Bell and folks like that. These are deals, of course, everyone wants on their logo slide, right? But number one, they were subject to a ton of custom development. So when you work with the big guys, they treat you like your outsourced dev team, right? So it's like, look at my product roadmap. Here's what I need. And then your product roadmap gets screwed in the process because you're doing all this stuff for one customer. So number one, that was key. Like, it was also riddled in like complex dealings. Think about like, multi-threading these accounts on like middle management that you have to go through to just get these deals done. It was impossible, and it took long, especially for a small sales team. Number three, they had endless pilots. They were like, hey, we can do these 3 stores for 6 months. And then after 6 months, we'll do another 6 stores for 1 year. And it was like forever to get to system-wide deployment, right? And then I'd say fourth, the other thing is these folks had buy mentality, or rather build mentalities, right? So like, they wanted to build everything in-house versus buy it off the shelf. So that was the focus. And then number 2, we'd go into the lean, right? Crazy to say this out loud, right? But we had 3 enterprise sales folks to get to $122 million in ARR by the time we went public in March of 2021. So
wow. Just hold on. Let's just sit in that for a second. 3? 3. Wow.
The East, Central, and West. And that was 250 accounts in the enterprise segment. We just split that a third equally. And we were just maniacal about knowing everything we possibly could in those, let's call it 80-ish accounts that were assigned to us, right? So it felt like at least a manageable number of accounts. So we got to build relationships with people on those accounts. We got to know the tech stacks. We got to know the competition. We got to know the partners. We got to know the private equity in those accounts. If they were public, we would listen into the earnings call or read the transcripts. So again, just like hyper-focus and knowing our account plan on each of those. So that's number one. Number two, we would segment out those 250 accounts. So for example, we knew there were like 20 Mexican brands, 30 sandwich brands, 40 healthy brands. And so we would do everything we possibly could to work with the leader in that category, and then kind of cool kids within the category that we labeled as well. So like in sandwich, we would work with Jimmy John's, but we'd also work with a cool up-and-comer like Mendocino Farms. In like casual dining, we did deals in close succession with like Applebee's and Chili's. And then over the next 5 to 6 years, we got 17 of the largest casual dining brands in the country to utilize Olo because we worked with the big guys. So kind of finding your segments and then finding the leaders and cool kids in those segments. And then, this was a numbers game, right? Like we knew the average deal in enterprise took 9 months or so on average, and that the average rep would do roughly 2 or 3 deals per quarter. So no one's knocking the cover off the ball in that way if you're thinking about it, but you do that consistently. And that gets you to, let's say, 10 deals per rep per year. Across our team, that's 30 deals per year. And then you hit 30 deals, and then you do it again next year. And then you do it again next year. And then you do it again next year. Hey, next thing you know, you wake up 6 years later, and that's like 71% of the market. So that was a bit of the playbook, right? And so that was the kind of lean part. And then I'll go to the efficient part, right? They call 2023 the year of efficiency. Like that's what everyone's calling it. We were living that efficient lifestyle when it wasn't cool to live that efficient lifestyle, right? Like we didn't have SDRs. We didn't have solutions consultants. We didn't have big sales ops team. We didn't have big growth marketing teams. What we did have was an A team, and we had a repeatable sales process, like as kind of simple and as complex as that. So we'd get, the brand, for example, when they were interested on the intro call. And on that intro call, we would listen. That's kind of simple. Like we would listen for something that mapped to our kind of strength. And then when we heard it, we would pass, right? Like, hey, they would say we have a stability problem. Like, oh, great. Like let's talk about that, and then get them to the point where they're interested in sitting down for kind of a pitch and a demo, right? And on that pitch and demo, kind of the next call, right? We would just, that pitch we would have with an overarching theme of something that was happening in the industry. So in other words, we would be the market leader or kind of the voice of authority of what's happening. And then we would do these tailored demos for the brand that was on the other line. So if it was like a sandwich brand, I was going to show them another sandwich brand, how it worked on our platform, how it worked behind the scenes, how it works in real life. And so we kind of tailored it for them. And then in the process, you get through the next call, they're asking, oh, can we do this? Or can we do this? And if it didn't work on our platform, we would say no. So we had this muscle of saying no better than anyone, I think. And so that kept our product roadmap clean and didn't get us into like custom dev hell of like where you get into a lot of times in enterprise, right? And so following in that process, we had this like technical discovery call. This, I think, was one of my favorite parts of the deal. We get them to a place where we're qualifying them. So we get them on a call. They have to fill out a form in advance. It takes them 15 minutes. They're looking at us like, what the hell, are you crazy? Like, we're not going to spend 15 minutes on it. But then they did it. They'd show up for the call. We'd prep for it. And then we'd give them tailored recommendations for their environment technically, and then give them a green light on the call if it worked. And we'd celebrate that green light like, yes, you guys qualified. Now we can work together. And so we kind of celebrated that win to get to the next step, which was like walking them through a deployment plan, like tailored for them. We'd tell them, hey, in this deal, you're going to have to allocate 10 hours for this person and 15 hours for this person. And it got them thinking to a place where, okay, this is not just something they want to sell us, but deploy. And like, do we have the right team for this? Do we need to reallocate people internally or call out folks externally? And then, finally, the contract process. Like, we exuded just confidence in that process, right? Like, we had, no pilots. We had no termination for conveniences. We asked for exclusivity. And, that was the flow that we had kind of over and over and over again. So I'd say kind of, listen, it's funny because in the moment you're not like touting, oh man, we're like sales efficient or we're capital efficient. We just, again, had our heads down and we just kept going with the process. Like, in fact, I was constantly getting yelled at by like our CRO and my CFO for like being the person that spent the most at Olo. I'd come back from Vegas with a bottle service bill from Omnia and they'd be like, what the hell is this? And so it turned out to be a superpower, and that's what it was. Like, I loved being kind of this efficiency aficionado in the process, and that's a little bit of our kind of playbook in secret.
There was, again, so much there. I want to highlight a few things. Really the common thread is this muscle of saying no, which can be so difficult to acquire and learn, but it's just one of those things that, whether it's in your personal life or anything, as soon as you say no to someone, they just like want it more. They're like, okay, how do I make that work? I don't like that answer. Like, how do we figure this out? And then it becomes collaborative, and then you're working together to solve a problem. And your smart idea to not chase these huge logos. I've been in a position in a past company I worked for. We had like the New England Patriots. Oh my God, look at this logo, and they completely just changed our roadmap and distracted us for like a year and a half. And we eventually had to fire them. And it was a huge, just time efficiency suck. The revenue numbers didn't even make sense. It's almost like you're buying this logo and you can't afford to sometimes. And then, the other things I've written down here, because I just love it, is, you segmenting out your ICP and then being very methodical in like, okay, yes, we need the leader in the space, but who are the up and comers? Who are the cool kids? Because a lot of times those are the ones that people are following because they want to be more like them. And I think that's brilliant to kind of do that dual approach. And I mean, the fact that you had no SDRs or solutions consultants or anything and 3 enterprise reps, like, talk about efficiency. Is that, so each rep had like roughly, let's say like 83 accounts or something? And
That's
and
right.
How much of the research was on them? Did you have the whole, like, was the company wide be like, hey, you're on point, but the whole company's got your back. We're going to help you research. We're going to do, different segment research, and we're going to analyze things. How much was on the actual rep versus kind of spread across the company?
I'd say, like, we had the luxury of having our founder and CEO who was incredibly well connected and incredibly well known in the industry, right? So he was a door opener, number one. And so we would often like knowledge share in our group of things that we need to know about accounts, or things that we need to know about industry, or things that we need to know about what conferences to attend. But, to answer your question, no, it was on us, right? Like, it was on the rep, and, you have to build in the right time from a time management perspective to, prospect, to prepare for the demo, to work on deals to close. And so, every quarter, we had a little bit of a playbook there. Is like, month 1, like, we're heavy kind of on prospecting and figuring things out. Month 2, all right, which are the deals that are real? While in parallel, let's keep some of that prospecting going. And month 3, especially in the last 2 weeks, that's where we did our damage, right? Like, we'd get these deals signed at the end of the quarter, for like June 28th, June 29th, June 30th. These are always like the most stressful, but also the most fun days for us, because we were just hyper focused on closing. But no, again, like, very much on us. And I think that was a time management thing as much as project management thing, and maybe some of my customer success, frankly, coming out like in the process. But we had, folks that were young, folks that were hungry, and folks that were coachable in that process, versus like, hey, this is my way. Like, I need to do it, a specific way.
I like it. I mean, how's your nervous system at the end of quarter? Are you still like getting butterflies, even though they don't have to be there anymore, or what?
I still love like an end of the quarter. Listen, whatever I do from now on, I'm still an IC at heart. And so, like, for me, the last week of the quarter, that's when, the majority of the deals come in. And, I'd say the vast majority of the time when people said they were going to sign and do something, they did it. And I think that just went to the connection and the relationship, right? Like, it didn't fall through to July 1st. Like, when they say it's going to sign this quarter, like, it's everything all out. My CEO is calling their CEO. This person's calling this person, and like we're getting it done. We are getting this signature through.
I feel like part of that is going back to that lean, like if everyone in the company, and you keep it relatively small, this like tiger team, the accountability goes through the roof, right? Instead of having 50 enterprise AEs and it's hard to go to all of them and be like, hey, like, is that one going to slip? What's going on? Like when it's all on the table with a small tiger team, of course things are not going to slip. You're like, now what are we doing? How do we get this done? Like no one can sort of hide in the shadows and be like, I got a bad bounce or whatever. It's like, no, let's work together to, change the trajectory of that bounce.
That's right. Yeah. Like, everyone had 80 accounts, right? And everyone was kind of high visibility on them. So if you weren't closing or if, there was a challenge, it would be very well known. So we just all kind of leveled each other up in the process and, had a great camaraderie in it.
I bet you guys going to battle together. Nothing like the battle to create bonds. All right. I want to get to this Wingstop win. So fly you back to 2014. I know this was an impactful story for Olo, for yourself, sort of helped you crack the code and win sort of the digital ordering market. Would love for you to walk through that deal.
Yeah. So love the deals, right? Every deal has a story, and we should write this one down for your newsletter at some point. But winning the Wingstop deal for Olo in 2014, this was 7 years into the business for me personally. And up until that time, Olo was known as this like up and coming digital ordering platform out of New York that was really just known for having one logo on the enterprise side. And that was this Five Guys Burgers and Fries logo. God bless them. I said their name out of my mouth 20 times a day for like 2 years because it's all we had, right? But it's safe to say up until that time, we were also in this like sea of competition. So we would lose the vast majority of deals to these incumbent, like direct pure play digital ordering providers. And we'd also lose them to like these all-in-one solutions. Think point of sale companies that also offer digital ordering as a feature. And I'd say while we had access on each deal, we were just getting our ass handed to us for like cost, inexperience, lack of integration. I just don't think we were commercially minded, right? Like we were doing kind of silly things and like losing deals, to competitors that we just shouldn't have. So, behind the scenes, but right before Wingstop, we had just hired this trio of execs. This was our first like real leadership team. Marty, Matt, and Scott, they formerly all worked together at another company that shared an investor with Olo called Recycle Bank. And so they had this like camaraderie themselves, and they came on board in like something like August 2013. And I think you can call Olo at that time primarily a founder-led sales team. So we had 2 false starts. So we hired 2 sales leaders that just didn't work out. So this was the 3rd sales leader, some dude coming in now that, maybe it's going to work out, maybe it's not going to work out, right around 1 million in ARR. So that's when Marty Hanfeld, who was my former boss, now current partner at A58 Partners, came on. And he almost immediately spotted a few things. Like we had this number one incredible leader in Noah, our founder. We had this incredible product that was developed by our CTO, Andrew, and product leaders like Dave, and a trend that was undeniable, right? Mobile phone adoption and mobile commerce. What we were getting wrong was our story, our buyer, our pitch. And the competition, I'd say, was hyper-focused on marketing. And so we just kind of followed them, right? And in our instance, though, we were losing. So right before this Wingstop pitch, we changed it all up. Like the buyer profile, the company messaging, the pitch, kind of been all one shot. So the new buyer profile, rather than marketing, was IT leadership. The new messaging was squarely around reliability, scalability, security. And we knew this buyer profile had one thing that marketing didn't. That was veto power. So if marketing really wanted a solution, IT could veto it because if it didn't work in their lab or if they didn't have the right license, right, it just didn't go through. So we kind of hyper-focused on that. And, I remember the Wingstop RFP, I got my IC jersey called by Marty saying, hey, you're on this one. And up until that point, like Wingstop was one of the fastest growing brands in the country. So it was super exciting. And that said, they called us because the previous Super Bowl Sunday, their digital ordering platform went down. So think about that, right? Like this is a wing brand, Super Bowl Sunday, their busiest day of the year, and kaput, right? It stops working. No one got their wings. It's a sad Super Bowl Sunday. But we successfully, I remember, answered that RFP. I remember pulling out all the stops. Like, this was like the art of it. This was, I think, was the most important part of it. Like, we had a designer create like a website that mimicked the Wingstop experience. We had an iPhone app that was developed on test flight for Wingstop with their menu and limited time offerings. And then in parallel with this like 97-page physical response that I printed out from FedEx, I shipped them an iPod to Dallas, Texas. So kind of goes without saying, right? We made it to the next round of 3, and then things went our way. We won the deal. We got 39 of the 40 votes in the room. We got awarded the business. The only person that didn't vote for us was a famous rapper down south that also owns Wingstops. And I think I walked in the room that day with like the Jay-Z diamond in the sky, because I was like bursting with confidence. Like, we finally figured this out. Like, it was the moment, I'd say Olo got its swagger and never looked back. Like, so you could think about that era before, like, we would lose dozens of deals, right? And win one. And that Wingstop moment, like, it's so clear to me in my mind, that's when it all shifted, and we would start to win dozens of deals and lose, one. And so this kind of DJ Khaled, all I do is win, win, win mindset came in, and that was really the start of chapter 2.
Very cool. I mean, that simple mindset set shift where you're like, okay, this is possible, is so infectious throughout the whole team. And what it sounds like is the shift you made was really to run towards the hard things. Like, switching from a marketing buyer to IT leadership is not an easy thing to do. That's a more complex buyer who you're going to have to get into the weeds. It's maybe not as fun of a sale. So making that shift, knowing that this person is going to be involved anyway, let's go to them first is huge. And then, just making that commitment to, go above and beyond just the RFP and show, hey, we're in this, and, realizing the pain. I can only imagine the pain that they went through of that Super Bowl, how many, not only like revenue did they lose, but how many detractors of their brand, and being able to like, play on that pain a little bit and show as kind of the night that's going to get them out of this pain is pretty cool. So is there anything when you look at that deal in particular, because you nailed it, let's just say that up front, but is there anything that you would do differently? Like, where did you go wrong?
Yeah, I'd say so. Like, only took 7 years, thousands of mistakes, right? Like hundreds of losses up until that point. But, I think about like, really for now, companies that are in that like stage that we were in, like $1 million-ish in ARR, alongside really a product and the maturation of the market at that point in time for us. I think where we made the mistake early on was hiring sales leaders in the past that were industry insiders and like knew everyone. So like we were starry-eyed. I remember in the first 2 hires, like, oh, this guy goes golfing with the CEO of this restaurant chain, or hey, he goes on a family vacation with the CFO of this brand. And I think that was like the mistake for us. Like, it was a common misstep. Founders are often like seeking out like the well-connected people that can just bring them into the accounts. But I think, just because someone knows everyone doesn't mean they're the best fit for your team. And I think for us, we realized that too late, and we burned through years, right? So I think for things like Olo, again, 1 million ARR, challenging new products, I think it was important to have an outsider's perspective, because for us, insiders, and even we were all young, inexperienced, we just kind of followed what everyone was doing. Let's just go sell to marketing, right? And whereas, when you think about hiring your first sales leader, don't go for that person with like most industry experience. Look for someone that could think outside the box, like couple them with advisors and then kind of influencers that know people that can help them. And I think doing something different from your competition is key. And for us, that was like that shift to sell to IT, right? Like, that's how we stood out and kind of, from the crowded market. So in the end, I think we found success through like this outsider, like Marty. He didn't come in with a preconceived bias. Like, he wasn't afraid to think outside the box. And I think that was like the shift that we kept kind of pushing towards, for sure.
Yeah. It feels like, particularly when, companies are making a large tech investment, they're pushing against the old way of doing things. So if you look and feel and sound like the old way of doing things, they're not going to feel comfortable, making that investment, which it sounds like you guys did extremely well as like painting yourself as the new innovative, kid on the block. I guess, as we move on to, I'm going to get to a listener question and then we can kind of start wrapping it up. But, what were kind of your 3 learnings? You can either take it from, Olo or just that particular deal, looking back.
I'd say kind of looking back, the learnings that we're trying to impart to our advisory relationships or investment relationships is, hyper focus on less versus more, right? Like build that rigor of saying no early and often, and then, go find each segment and subsegment of that market and find the banner wins in that kind of cool kid and leader, right? So, kind of profile. And then personally, like just be confident, be yourself, like know your accounts inside and outside. And when your jersey is ready to be called, like step up. And so I think that was, as simple and as complex as it was, right? Like we just stuck to this vertical. We didn't do all these other things. And over time, to be clear, we got through 71% of the market, and that creates a problem. Hey, we sold through, but that creates the opportunity. What other segments are there? Okay, let's go back under 100. Let's go open up this large enterprise. And those are the things, by the way, that we did, right? So we now, at Olo, there is a robust practice of kind of emerging enterprise, mid-market, the 5 to 100. And now we've kind of opened back up that door to go after those top 15 accounts that are riddled in complexities, because we believe, SaaS should be 100%. Like it should be buy versus build in this mentality. But again, you don't need to do it all, right? And patience, just consistent batting average, right? Like that's what gets it done, I think, in this market.
It's almost like the more you focus, it gives you the luxury over time of like widening that aperture slowly, and you stay the same amount of rigorously focused, but you learn enough to allow yourself to open it up slowly over time. And I feel like it's very attractive to be like, oh, let's just open it up. Then we have more at-bats and then we're good. But you miss out on all the learnings, which makes it much harder to be repeatable, scalable. You don't actually know why you're winning. I think that's a lot of great learnings. All right, shifting over to a listener question. I like this one a lot, and I think it's right in the same wheelhouse of what we're talking about. This comes directly from a founder, so thank you all for sending us questions every week. Question is, we've been trying to go up market for the last 6 months, but our enterprise team hasn't closed anything meaningful. How long do you keep at it before pivoting your focus?
7 years. I don't know that everyone needs to take 7 years, to be clear, right? And, we hope that it takes half the time for most folks, but in some cases it may take that long. So I think just having the right signal and having the right conversations, like you don't always, like listening to the market and like seeing, hey, is there an opportunity for us? Really understanding the competition, like, hey, is there some weakness in the competition? Is there some like, product deficiency, or is there some kind of larger thing? Is the two companies getting acquired or merging, where you can create an event more or less, right? And all it takes is just one banner win to start. For us, that was Five Guys Burgers and Fries. That it felt like, okay, like it wasn't the Wingstop moment, but it was the moment that we shifted, right? Like we were like, okay, there is something here, B2B to C. Let's now go sell through the market, understand, and then go figure out why people are saying yes, but in our instance, why most people were saying no, right? And so if you can't find your Five Guys, I'd say over some horizon, let's call it, I'm just going to say 3 years, right? In that process, I'd say look at the other maybe verticals, look at the other segments within that vertical that you can go and chase. And then some of this comes to like the founder, right? Like, is your product ready for enterprise? Like we always knew, even at $1 million in ARR with Five Guys, even before Five Guys, that our product was ready. Like that we would be able to learn and be coachable in the process, and then create this repeatable playbook. So just having some tinkering, I'd say, if it's not working out. But then if you have some other clear signal, right, where, hey, it's not working in enterprise, but it is in mid-market, I'd shift as many resources there versus enterprise, and or find net new kind of markets or opportunity.
So patience with a little bit of, just listening to the market, what it's telling you as much as possible. I think another thing I want to highlight is I feel like part of what bought you the time to do the tinkering, to figure it out, was the second pillar, which was efficiency. I think there's a lot of companies out there, startups, who maybe go raise a bunch of money, they hire big bloated teams, and then they're on this like time crunch and they need to figure it out very quickly. And so maybe, to lend another perspective to answer that question is, maybe look at your efficiency metrics and see if you can buy yourself a little more time to figure it out and take some of that pressure off. Is something to look at too. All right. As we wrap up, final two questions, and I keep these intentionally vague all the time, so you can take them anywhere you want. You can highlight something we already talked about, or take it a different direction. But there feels like there's a lot of best practices out there that are no longer serving us as go-to-market leaders. What is one widely held belief that either revenue leaders or even founders believe that you think is bullshit, or at least no longer relevant?
My belief, which is not widely held, is outbound is dead. And I know it's a little bit of a controversial statement, and you're going to have a ton of qualifiers in there. But if you're going after enterprise in this market, like the signal to noise ratio is a massive issue. And like 5 to 10 years ago, there were just simply less, SDRs. There were simply less tech companies trying to gain the attention of qualified buyers. So I think about like the industry that I operated in, right? Like even physically, we would go out to these conferences, and that was like a superpower also in the early years. Like there weren't a lot of tech companies there. Now, if you go, it's overrun with tech companies, so much to the point where like the operators are just constantly looking over their shoulder because they may get accosted by the next guy selling them loyalty or CRM, right? So it feels like the new model is a combination of partnerships, influencers, and advisors, the folks, in other words, that have distribution and can help companies find qualified, targeted, warm intros and get them in the door. So at the same time, I think, those people need to understand and have skin in the game of the product and have a track record for success. So just because, that partner has a ton of customers, or because that advisor or influencer knows a bunch of people, it doesn't mean that they're the right fit for your company. It's kind of figuring out who that is and like pairing that up with your company. Like I'll tell you, on the 858 side, again, we have the luxury now, right? We have these 23 restaurant executives, and they're telling us the pain that they're facing. So these folks were mapping to the opportunities, and that means saying no to a ton of different deals, right? That we're not qualified for, and they're not qualified for us. But my belief is that there is, for every company, a partner, an advisor, or influencer that can get them ultimately into that segment or vertical.
I could not agree more. We built this out at Outreach. It was like a big project of mine. We live in such a hyper-connected world that if you've spent any time in a category or an industry, you're typically 2 connections away from someone. And it feels like the new outbound is going to be people building distribution, building networks, providing value to that network, and then looking at creative ways to extract, value and find that best point of entry. It feels like almost the new SDR is going to be someone who can map out the best point of entry into an account at the right time. Couldn't agree more. Okay, last one. What is one strategy or tactic revenue leaders can implement today that you think will move the needle?
I think everyone at any level today needs to have ChatGPT open on their computer at every time. I mean, this is constantly there. So for me personally, right, the mobile phone changed my life, consumer-wise, then also career-wise. And I think that's what we're seeing here with generative AI. So every leader, every, salesperson, I think just needs to have it open, like tinker with it daily, put in a task that you were doing and just constantly level up, because that thing is going to change the landscape of how we all operate. And I think if the more we can get ahead of that now, the better you'll be a month from now, years from now, versus getting kind of left behind in the cold.
Fantastic advice. And I'll just add to that is it's exponential, right? So like the more you put into it now, if you start interacting with GPT-4, ChatGPT, AutoGPT now, and you get a year ahead of someone, as these new releases come, because they are innovating exponentially and people are innovating exponentially. So if you just have a year is going to be like a lifetime of getting ahead. And so I agree. Even if it's, it's not helping your day-to-day too much, experiment, have fun with it. You'll get to a really good place. That's awesome, man. Well, JG, I appreciate you hanging out. That was just littered with incredible insights, knowledge. If folks want to, keep following you, maybe get involved with 858 in some way, what's the best way to do so?
So, 858partners.com. You could find us on LinkedIn, on Twitter. That's where I'm most active, at JGeo, 4 letters, early Twitter days. So yeah, please reach out, and to the extent we could be helpful, happy to chat.
I love it. Awesome. Well, appreciate you, brother. And I appreciate everyone tuning in. I hope you found that as valuable as I did. As always, listening is one thing, executing's everything. Map some of that out. Look internally, particularly if you're in a vertical SaaS company, like that was just gold. So take it, do what you will with it, and we'll see you next week.
Much love, brother. Thank you, Scott.